Okay, when I say Viking, what do you picture? Probably some bearded guy in a horned helmet, right? Fire, chaos, a real thirst for battle. But what if I told you the sagas kind of got it wrong? What if the entire Viking Age wasn't really driven by glory, but by a liquidity crisis? Yeah. Today, we're swapping those sagas for spreadsheets to uncover the absolutely brutal business plan that fueled the Norse world. Let's dive in.
So that's the big question, isn't it? Were the Vikings just these mindless, chaotic raiders, or were they something else entirely? Maybe savvy financiers. We're going to peel back centuries of mythology to look at the cold, hard economic engine that was humming right underneath it all.
And to find that answer, we've got to stop thinking like warriors and start thinking like accountants. It's time to put away the sagas for a minute and just follow the money.
I mean, this is the image we all know and love, right? The pop culture Viking. It's all about pure chaos, fire, and fury. And look, it's a powerful story, for sure, but it's not the whole story, not even close.
Because the reality? Well, it looked a lot more like this. Less about random chaos, and way more about cold calculation. These weren't just random acts of violence, so no. They were the strategic moves of a highly efficient, almost data-driven network. This was a business plan, plain and simple, and it was designed to solve one very specific problem.
So, what was that big problem? It all boils down to one word: liquidity. Believe it or not, the Viking Age wasn't sparked by some deep love of violence. It was kicked off by a desperate need for capital.
Okay, so try to picture Scandinavia back in the late 8th century. You're sitting on tons of valuable resources, things like timber, iron, furs, but you've got a huge problem. You have no major silver mines. And without a steady flow of silver, you can't mint coins, you can't really fund large-scale trade, you can't build a state. You're what we'd call today asset-rich, but cash-poor.
And that's all liquidity really is, right? It's having cash, or in this case, silver, on hand to make things happen. The Vikings had a massive liquidity problem. But here's the thing. Just across the sea, the monasteries and kingdoms of Europe were practically swimming in the exact silver they needed so badly.
But, just wanting something isn't enough. You need the right tool for the job, you need the technology to go out and get it, and for the Vikings, that game-changing piece of tech was the longship.
Now, don't just think of the longship as a warship. That's really missing the point. You've got to see it as a masterpiece of logistics. It was this incredible technological breakthrough that just slammed their overhead costs, the cost of acquiring assets down to almost nothing. It made their entire business model profitable.
I mean, just look at this thing's competitive edge. It was insanely fast and totally seaworthy so it could cross the open ocean. But, and this is the real kicker, it had a super shallow draft. You know what that means? It could sail deep upriver, completely bypassing all the coastal defenses to strike right at the wealthy, undefended heartland of Europe. It was a logistical advantage that nobody at the time could counter.
So this massive technological edge gave them the power to run what was, when you boil it all down, a brutal arbitrage economy. They were connecting two completely different markets by force and then profiting big time from the price difference.
Arbitrage is actually a really simple concept. You acquire something where it's cheap or easy to get, and then you sell it where it's rare and expensive. This basic fundamental economic principle was the engine that drove the entire Viking Age.
This slide breaks down their whole supply chain into three pretty simple steps. First up, asset extraction. They'd hit Western Europe and seize silver and, tragically, human beings as slaves. Second, transport. They used the massive river systems of Eastern Europe like a superhighway to move those assets across the continent. And third, liquidation. They'd sell everything for a massive premium in the incredibly wealthy markets of the Islamic world.
And that is the core of their entire business model. They were, for all intents and purposes, the most ruthless logistics company in history. They took assets from an area with low security and high supply, and they moved them to an area with high demand and tons of liquidity. It was a cold, efficient, and just brutally effective system.
Now, here's where it gets really interesting. If you strip away the swords and the longships and just look at the underlying logic, it starts to look surprisingly modern. In fact, it looks a heck of a lot like private equity.
Now, seriously, the parallels here are absolutely striking. A modern private equity firm targets an undervalued or inefficient company, right? They launch a hostile takeover, strip its assets, cash, real estate, whatever, and then they redirect that capital to more profitable markets. Well, the Vikings did the exact same thing. They just did it with monasteries instead of corporations. It was a hostile takeover, but on a geopolitical scale. And this, right here,
is the crucial insight. The raids weren't really driven by hatred or some kind of religious war. From a purely economic point of view, a wealthy, completely undefended monastery was just a mismanaged asset. It was a company with a ton of cash on the books, ripe for a hostile takeover.
It's just a powerful reminder that history isn't always about good guys and bad guys, or some grand destiny. A lot of the time, it's just about the numbers. It's about arithmetic, system design, and the brutal, unforgiving reality of a supply chain.
It really makes you wonder, doesn't it? If you start looking past all the traditional stories and just focus on the flow of capital, on the logistics, what other parts of history are really just business plans in disguise? Something to think about.